Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. This stream today is exclusively in the Bookmap Discord TraderLab community. It will be posted later in YouTube for those of you who would like to watch it again or are just visiting. Also, this stream's based on integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis in the intraday developing time frame. It's based on the business of trading, and it's also based on structured trades that are available to you to review and reverse engineer in the Bookmap Discord TraderLab community. The goal of TraderLab is to help traders understand how the market works, why it does what it does, and how at times to get in alignment with it with vetted trades that have a statistical edge. And as we all know, the outcome of any trade is random. Whether we are just making them up as we go and gambling, or whether we actually have a business plan with the objective to create sustainability. One moment, please. I have a couple announcements for you today. They're kind of important, so please take a peek. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. If we get into something interesting, we'll talk about it. Also, you can always review these streams, and I always recommend you do. They build on top of each other from each previous session. And the idea of TraderLab is to help you guys understand that there is a process that you can build out, and basically you sit and you wait for your trade to come to you as opposed to you chasing the market around. One moment, please. Have a little technical thing here. Let's see if I can get this working right. If you haven't done this, shoot a photo of your favorite trading companion, hashtag BookmapPets, drop it on LinkedIn, X, or Instagram. You can win a free month of Global Plus. Pretty cool. Also, if you haven't taken advantage of this, Bruce's pilot program. If you want to build an edge, you might be able to get some help with understanding the process of doing that. You have to register for it, but it's open to everyone, all Bookmap TraderLab subscribers, as well as all Bookmap participants. There's going to be a special professional trader series going to be taking place next week. It is exclusive to those of us who are in the Bookmap server. It is the actual Academy coaches. Now, the schedule will be put out for this. It's not solid yet, but you'll, if you go to the event area, you can check it out. And these are exclusive for Bookmap Discord participants. Now, you don't have to be a Bookmap user, but you do need to register. And if you're visiting in YouTube and you're interested in this kind of education, you might want to consider taking advantage of this. Now let's go into the higher time frame. This is the basis of the condition of the market. I do this every day. The idea in TraderLab is to have a process, and we have to start the process by understanding market mechanics. What is the market doing? Well, this is FOMC day. Now I want to point out a couple of little pieces here. The market tends to go up to go down. Now, this is an excess. This is called a tail. And what it really is urgency. And on FOMC day, you remember we had a lot of volatility. It was a terrific day for traders in TraderLab. But we did not take this low out. So what was going on here is we wiped all the longs out, but we didn't get here. That's an important piece of information. That suggests, yes, the bull market's intact. Yes, we're going potentially higher. And of course, for us, if we're short-term traders, day traders, it's how, when, where, right? So that's another issue. But let's take a look a little further. The value area is where 70% of the volume takes place. And it's these little yellow boxes. So this is where most volume takes place on a day. Now, the yellow line is the actual high volume. And the way I always think about this, and I think the simplest way to think about trading is shopping. So if this price is too low and it's unfair now, we might not come back to it. Now let's go up in a higher time frame as you guys think about it. When you look over here, this is a composite of the volume in all of this, all the volume from this swing low to the current to yesterday's high or swing high. When I put all this together, I can see in here this one day, this is the actual auction for the day, too high. But what was too low? Most of the volume tapered off down here. And that price is about 87.75. If you look at the current low of the day, and this is not a recommendation, we just checked that area. And there's no precision here, 87.75. I call that an outside edge. What else is at 87.75? It's where we broke out of the previous RTH high. Now, we never know what the market's going to do. You know, this is not, we can't do that. Now, if you can, come to TraderLab. I always would like to find out how to do that, but never have, so I don't try. What I do, at least what I do, and I think what trading is really all about, is alignment, not prediction. I don't know the market's going to go there. The market could just as well come out the top, and or whatever, you know. So it has always possibilities, but not anything more than that. So possibly, and we're going to talk about the possibilities. So possibly this is an outside edge. Now in trading, there's no precision. This is not like, you know, a line on the chart doesn't mean anything. It means it's an area, so you understand. But let's go and look at yesterday. Yesterday, down here, don't forget, before this took place, this was the all-time high in the RTH. And the ETH was just, I think, a little bit above it. Can't remember anymore. And we missed. Now, this is this day, okay? We missed here, and this was too low. So I found 70 on yesterday, which is the retail price in this volume. So yesterday, 70 was on the chart. And you're going to see all this is in Bookmap. So all these levels are now in Bookmap because they're intermediate time frame. Now, I don't need to look at the higher time frame. I think we can all agree it's up. So we are trading as day traders inside of RTH levels, and then whatever happened, you know, so this is yesterday's low. Stops are under 70. As far as I'm concerned, it's not a recommendation. We're not going there yet. So the idea then is, where's the next level? It's here. So if I come outside and I come down, and it can go anywhere, remember, it can do anything. That's trading. This is my next area to observe for potential longs. Now, again, not a recommendation. So what do we know? 97 was the fair price from yesterday. This is called value area high, and this is value area low. This is where 70% of the volume-ish took place. If we come out of the value area low, we can then come here and, you know, wherever it goes, you know, part of the thrill. Now I'm going to show you the ETH. This was done early this morning, you know, probably about 6:30 a.m. my time, Central Time. We are trading inside of yesterday's range. This is called the overnight volume point of control, and this is yesterday's fair price naked volume point of control. A point of control is retail. Remember, think shopping. And what about yesterday's volume point of control? Yes, now I'm back to volume point of control. Day before yesterday, I mean. It was too low. Okay? So, and this was the excess from the FOMC. Now, these are full session. They're not going to look exactly the same. The thing I wanted to show you was we started out today in a pretty much a fair area. Now, let's go to Bookmap. And guys, if you have questions, post them in the TraderLab. If you're visiting in YouTube, and by the way, was it a long down at that 87.75? I'm going to ask. We'll see, huh? We'll look at that when I get to it. Just keep that in mind. Now, this is the RTH open. Let me show you these levels again so you can see where they are. This is the fair price from yesterday, which set up early longs. And there's that level that I just showed you. And currently, it's the low of the day. Subject to your understanding of how the market works and something called the auction, this might be, if it's in your plan, a long. And again, not a recommendation. We're all clueless, but not ignorant. So let me take you back to the higher time frame. I just want to show you what this might mean. If this is an outside edge, and this might be too low, where might I come back? Might I come back to 97? What do you think? So where is 97? Here. So it's not a recommendation, but this from here, the idea might be to come here. And then if we can get past here, we can rotate back up. I'm just saying, and it's not a trade recommendation other than it's the way the market tends to work. Is everybody with me so far? Now, let me give you some more. I'm going to give you statistics now. We're opening in range, in value, right on the edge, the cusp, if you will. So yesterday's high is up here. ETH high is here. The overnight volume point of control, this is the retail price, and it's shifted just before the RTH open, like a minute. So this is the RTH open, opening in value, in range, higher in value, in range. Now let's talk about what it means. The market is on the edge of balance. Now here's something that almost nobody talks about. It is discussed in TraderLab, and if you've been trading for any length of time, this is something you want to know. The market balances out. So if the market is above settlement, then the market is long from the ETH. If the market is long from the ETH, then the possibility is we're going to get what's called rebalancing. Hold on one second. Getting to that 97. I got to move some stuff around over here. Sorry. One moment, guys. I normally don't trade when I'm streaming because I'm not good at it. But when I get to a location that is material, and notice the 97 is the target, right? And if you take a look in real time, where do we just go? I think 97, right? Anyway, neither here nor there. So inventory rebalance happens, and that means if everybody's long in the ETH, we can rotate and potentially equalize that inventory. And you can learn more about this in TraderLab. Just a conversation we can have. There's a number. Obviously, there's a number of elements, right? So let's watch. So RTH open now. The bias for me, and I'm going to give you statistics, is to get long somewhere. So we're opening higher inside of yesterday's range. So probabilities of taking out the first hour's high or low are 98%. Taking out the ETH high or low, 97%. By the way, yesterday, I don't believe we got either of them. The previous high or low, 82%. Getting to the overnight volume point of control, this 81%. Getting to the ETH high, 76%. Getting to the value area high, this is not a reach, is 72%. Getting to the point of control, previous point of control, which is 90, whatever it is, 97, right? This is, you know these stats if you're in TraderLab, 68%. Taking out the first hour's low, 62%. I think that's enough to get us started. So what I know is I have a probability of getting here. I know I can balance the inventory. I know that statistically, if I'm in an uptrend, in the context in the higher time frame and the intermediate time frame is long, I want to be leaning to the long side primarily. Doesn't mean I can't be short, doesn't mean anything. What it means is there's a bias for me, and I'm not saying this is right because this is all time frame oriented. My thing is I trade for larger rotations, and the only reason is I take stops, you take stops. I like to get paid when the trades work. When the trades don't work, I'm still going to take the same stop you take. But how do I recover from the stops? I have to put the trades on and then try to take. What I'm trying to do is I'm using this short-term microstructure in order flow for positioning inside of the developing time frame. So I'm expanding the rotations that I am trying to trade. And I'm relying on statistics to help me. And the word is help, not predict. So, RTH open. How are we doing in TraderLab, by the way? Everybody conscious? So, I'm looking for a long. Now, remember. Oh, and there's another thing I forgot to tell you. Yesterday, if you watch yesterday's stream, 67.10 was a key level from yesterday. Big deal. In fact, the last long we had yesterday in the stream, which I think was from the mid, I can't remember anymore, but the area of the mid, the obstacle, and there was resting liquidity, and all through the day yesterday in the RTH, liquidity was showing up. This is how order flow can help you. 67.10 is kind of like where the sellers, the icebergs, were. So we want to remember 67.10. I'm going to throw a little line in here just so we have it. Okay? 67.10, well, ish. All right? Don't hold me to it. It's close. 10-ish. Now, so I have 10 from yesterday, and it's interesting. It's aligned with the overnight volume point of control. That means that's where the highest volume is from the ETH. Now, let's go. Is everybody tracking? This is all part of trade plan. What I just went through is how I orient myself. And then I have all these levels. I'm looking at the condition of the market, and I know the trades I'll take if they show up. What I don't know ever is what's going to happen after I put the trade on. This is part of the thrill of randomness. So I've got this with an 82% probability. I got yesterday with the 10, which is a big deal. I have a high probability of getting the ETH high and yesterday's high. I also know it's Friday, and I'm anticipating something called responsive selling. Responsive selling is long liquidation. So we have two scenarios for liquidation. We have the ETH for rebalancing of the inventory, and then here's the possibilities. Once the rebalance is done, we can continue on our merry way with the trend, go to our statistics up above, or we can continue on our merry way, not get through the 10, and if it fails the 10, the longs that come in early also can get thrown under the bus, which is what happened today, but nobody knows. So the idea in the trading business, as I experience it, is I can't predict. I do know where there's key levels. I know what the behavior might be and where it might take place. I have no idea what the outcome of any individual iteration trade might be. I do know that when I interact, I have a statistical probability that favors me. I know I'm going to take stops. I know that I'm in the gaming business, and I know I'm going to pay the gamblers. I am not a gambler, but I'm trading because I trade with an edge. Casinos aren't gamblers either, but they still pay the gamblers. So I know that I'm going to pay. I just don't know when, and I don't know if I'm going to have a winning day or a losing day. I'm just going to take the trades, and then I depend on my business model over time to extract dollars. And if you're in the business of trading, you really need to look at it not as a video game, but when you come to the market, it's no longer a question of what you will do. The question is, what will the market do? That's random. What you will do, if you ever have to ask yourself, what should I do? Is it going to go up or down? Which is always the question. You can't answer that. The answer needs to be in your trade plan. How you enter the trade, what a trigger looks like, where your stops go, etc. What do you do? That is what is required, in my opinion. And then again, up to you. Is everybody with me? Let's go. So market opens, RTH open, inside of value, 10 resistance, and then whatever, right? This is the new retail price. What does it tell me? That's too high. Right here. So the possibility, if this is a shopping experience, which is what trading really is, then the possibility is to come here. Is this too high? What about this? Is this too low? Well, if I leave it, and now let's go into microstructure. What do I know? I got resting liquidity down here. What are they there for? I don't know. What do you think? Maybe they're buyers. Maybe not. Maybe it'll pull. Now we're going to start getting into the micro. Right here, I have what's called the variable high volume node. I'm going down into the subatomic scalpel level. Now, all I'm going to do now is I'm going down in time frame, really. And I'm looking at the value of the product. And if you're in a store, it works the same way, except here, it's not static like your store is. You know, the price of a can of tuna, pretty much the same all the time. If they put the tuna on sale under the retail price, you might get buyers for it. If the price of tuna gets too high, you'll cut off the buying. And then the market will come back to the retail price. Okay? This is shopping. And that doesn't change too much in your supermarket. In our business, it's all the time. So we have a real-time auction. In your store, that auction, they might change the prices every week or put it on sale to put it back, to retail. But it's the same process. It's just different time frames. And we talk time frames. We can talk anytime you want. But the clock doesn't register what happens in here. It doesn't regulate it. So in other words, you guys are on fixed time, static time frames. That's not the way the market works. The market's not looking at its watch to figure out what to do. The market's going to spend time in an area as long as it needs to discover the price. What's right, what's wrong, what's high, what's low, too high, too low, auction, retail price. If it moves down, this now becomes microstructure resistance. There's your resistance. There's your break. There's your resistance. Look where the resistance. Now this is the scalp area. And I don't mean scalping. It's scalpel. And what I'm showing you is microstructure. And I can go deeper here, but I don't need to. And I don't want to. So I can see right here, the market is going to go down. And when I say it's going to, I'm not saying it will. I'm saying it's right now saying that. This is language. I don't use any indicators. So, okay, we found too high. But now, where's too low? I don't know. So I'm looking for a long. And I'm sitting here going, I don't know. Do you know? Tell me if you know. I don't know. What do I know here? Chop, chop, chop. What is going on here? Icebergs. And what else did we say at the top of the stream? Rebalancing. What else did we say? It's Friday. What might you anticipate? Selling. Who's selling? The longs. If you're long, do you want to hold this thing over the weekend? Subject to tweets, geopolitical events, and a full moon? Probably not. Too high. Microstructure. This is an auction. I'm not buying that. Yeah, but it's on sale. Volume. This is the auction. That's the fair price. I'm not paying that. And this is where the buyers are. Sellers, buyers. Where's the volume? It's there. What happens if it's too high? I'm out of here. What happened over here? Too high. I'm out of here. See the same? So I'm narrating this, and I'm, of course, below the mid and the VWAP. But my objective is to get these guys out and to get buy stops in here because I need buyers if I'm going to get long. Well, who becomes the buyers? Don't the sellers become buyers? The buy stops? Think about it. And the longs that are in here from the ETH and yesterday, don't the longs become sellers? So the longs become sellers and the sellers become buyers. So if I got in here in the RTH in the first 2 minutes, I have sellers. I already know who my buyers might be. The challenge naturally is where to get long, to take advantage of the buy stops, which are, I call fuel. Years ago, I built a trading system which was built on trading in the stops. I know. And why? My stops always were getting taken out. I said, well, maybe we should do something different about that. So what do we know? Let's come back. The long is doing a nice job, isn't it? Kind of glad I put that one on. So this is the retail price. And what was that probability you're asking? I know. Let me remind you. 68% that I get here. Well, shorts, too high. Where were the buyers? There. Break low. Where were the buyers here? There. Break low. Short. And these aren't shorts. I'm reading the short. Short. Break. Shorts. Break. Volume is here. Break. Going lower. I can do this in any time frame as you think of it. And where am I trying to go? Here. I have no short on because I'm only looking for longs. Just me. Not saying it's good. I'm just saying it is. So far, now I'm at my location and the teeth start to chatter because this is where I want to get long. Let's watch. VPOC migration. What does this say? Let's come back to the language of the market. Notice my process is consistent. I have to be anchored. And in my primer webinar, which adds about 34,000 views, I talk about anchoring. Anchored inputs means no variable inputs. Casinos play games with anchored inputs. There's a proven business model. We don't have to make it up. It already exists. And it's been extremely successful. And yeah, the casinos still pay the gamblers, but how come they can manage to comp hotels, fly high rollers in, give you the cocktails and the ticket to the buffet and still pay the gamblers and build larger casinos? How do you think that happened? Isn't that the business we're in? And they don't have variable inputs. They have anchored inputs. That's your model. Now, you don't have to accept it. That's okay. I'm not saying you should. What I'm saying is if you have winning trades like we all do and you're still losing over time, then you don't have an edge. And the problem, and I have to mention this to you, is we all have winning trades, so we think we just have to make it better. But if you're trading without an edge, you're always going to come back to the same place. This is our new retail price. Now, remember what the idea is. Is this too high? Yes, I left it. What about this? Is this too high? What is this? My buyers are here. Now, I never know, and I don't know who does, except what's this? This is my location. That might be too low. So let's think about it. If this might be too low, what are we going to do about this? And this is my new retail price. So this is yesterday's fair price. This is the current fair price. So, and that's too high. Well, that's no good. Let's look. So this is my first area to look for a long. So right here, liquidity comes in the book. There's absorption going on here. And this is now my retail price. For me to get long, it has to get above this. This is my resistance. Why? It was too high. Now, let's assume you can't get in here, okay? Now, if you're anticipating this, you would already be stalking along. But let's say we're just all regular traders and we're sitting here with our jaw on the floor. What do I know? Sellers came in here, and if I was long, why does this liquidity comes in here? Because it was too high. There's my sellers, icebergs. Now I bounce off of too high, but don't forget, too low. Too high, too low, retail. So the possibility is if I find too high, Of course, the possibility is it could drop out the bottom and it'll be, as we say, thanks for playing, and I get a coupon to the buffet. But if I found too low, what does the market tend to do? It tends to come back and check. Is that too high? Or is this too low? Is that too low? Let's watch. Watch VPOC migration. What is that? Too low. What's this? Let's raise the price, Lewis. All right. So what are we doing right now? We are taking a long if it's vetted and you're in TraderLab and it's a vetted trade for you. If it's not, you're sitting here, you're a tourist working on your crochet. What happened here? Let's come back. Right here, there's my buyers. You see the change in behavior? Buyers. Where were my sellers? See? Where are my buyers? See? And what does this say? Language, absorption. So you have this. I'm going to draw a little box for you. I want you to see something interesting. This is how traders can learn to read the auction. So if you don't have indicators, or I don't, then I have to figure out something else. I actually had to learn what the market is, how the market works, as opposed to letting my indicator tell me what's going on. Because the indicator is only one dimension. It just follows a derivative price. By the way, this was the other element. You see this? Now this is order flow. You don't have an order flow tool. You have no idea this came in the book here. That, for me, is important because it's pressure. It's a skew of the book. So now I have the change in behavior. I have the resistance. I have the potential support there, and here. Because this is where the volume is. This is an auction. I'm not paying that. Yeah, but it's on sale. Volume, microstructure, break high. Right here is where the sellers were. You know the old concept, resistance becomes support. Another way to look at it. And now this is support, this, and this. VPOC migration. You could be getting along there. You could be long against here, and your stops have got to be below this out here. And where are we going again, you ask? There. For scale. And why? Sellers are here. Buy stops are in this leg. They are the fuel. We need the guys on the other side of the trade. Just like the long I'm mentioning to you from the 87 level, which is already on the chart. Not what will happen. If I know where behavior might happen, I can anticipate it. I cannot predict it. I know what happened here. I know this is too low. I know the sellers got run over right there. So I know if I come back, and now I have a sell sweep. Now I'm going to add some more order flow into this for you. I got a sell sweep. A sell sweep often suggests reversal. I say often because, you know, there's nothing. Everything is like, I don't know. So sell sweep says potential reversal. Buy sweep says potential reversal. So this says up. This says potential down. The thing is, I'm not at an outside edge. At outside edges, sweeps mean more to me than just in traffic. This is an outside edge going into support. Okay? This is a potential trigger. This is a long. These are all longs. This is a long. And again, your stop's got to be outside. And then this is your target. Now we are going for the, let me show you the targets up here. This is the next target. And remember the line here. This is that 10 was a key level. That was our target yesterday for the trade at the end of the day. Sweep at an outside edge. Icebergs. Sweep, Heath Chatter, needs to stay above this volume, microstructure, And the target is this. So this was the next target. And these are, structured trades you can learn in TraderLab. And then go on for this. Okay, let's watch. Important level. Sweep, sweep, big deal. Where's my resistance? See that? Let's look. Let me take you down into microstructure. And it's not as micro as you can get with Bookmap, but it's micro enough for the stream. You can learn more about this in TraderLab. So there's my level. There's my sweep. You could have been out of the trade here. If you're running a 2-lot, which is a minimum configuration, this trade would be over there. If you're running a 3-lot, you have a runner, and you're going for yesterday's high, you're going for the ETH high. That's just statistical probabilities, nothing more than that. Let's look at this. So I have this, you'd be done here, 82%-ish probability. Past performance, not indicative of future results. The stats are available in TraderLab. And now a sweep again. Right here, I know I've got trouble, but I don't know, it just because there's a sweep doesn't, like here, there's a sweep. Well, I'm above it. This becomes support. Let's look at the change. You'll see. Let me do this for you. So, where's my buyers? Where's my sellers? And this makes it very interesting. Right here, which was from yesterday, the 10, the high volume is here. And high volume, remember, what is high volume? It's your retail price. Well, I don't need to put this in here. So this is my high volume. So remember how this works. I'm not paid that. Yeah, but it's on sale. There's your buyer. There's your seller. There's your sweep. Same thing here. Here's your sweep. Here's your buyer. Here's your seller. Your buyers are here. Break low. Right here, you could bail out of the thing, or don't forget, this is a target. You'd be done, or you have another one, and then you have this. Now this is support, and it's a runner. Let's look at it again. Notice the iceberg. So I know these guys are selling, and there's always passive sellers. But icebergs, they have to show the tip of the iceberg, right? And look what happens here. I got liquidity. Let's just watch all the pieces. This comes in. Think of a lid on a pot, or think of it like the invisible hand pushing. And it is dark under here. So right now there's a bit of a skew. Where's my resistance? Isn't it there? I'm not getting above it. I don't know. Do you? I don't know. But this is important right here. Breaking below can do anything. Now, this is like a volume point of control, a high volume node. It's right there. This is like that VPOC I've been showing you. Everything is fractal or multiple time frame. I got in trouble for calling it a fractal, so I'm going to... It's a matter of perspective, and it's not quite semantic, but Matryoshka doll is really what this is. This is a vertical, Russian dolls, it's a vertical integration of time frames. So, too high. And I have to clear this to go higher. And if I can't get above this developing volume, I can break lower. And this is also resistance. Break low. Now, what's resistance? It's here. Watch. See? So, if, subject to my plan, if I'm just on the longs, I got this, and right here, I have a trigger. This says, if there was any doubt in my brain about this 10, and that I exceeded it, and my sellers are still here, and now I have a sell trigger, and it's right there. There's the test of the retail price in this time frame. I'm not paying that. Leave the store. Then what? Where is my current retail price? Now it's here. Variable high volume node. Watch the behavior. Now this is my resistance. I got to extend this thing. I'm waiting for Bookmap to actually get around to making some changes to these tools. So once we put this thing on, I don't have to keep coming back to it. So this right here, this is the problem. Okay. So, and this is VPOC migration. Now, last time you saw VPOC migration, it was a long, right? But I get VPOC migration here. Is it a long? It's not the same. Why? This is too low. This is too high. And now this is the fair price. Here's a couple things that can happen here. I can come back here. There's my liquidity coming back in. You see it skewing the book. Or I can come to VWAP and get a reversion trade right here. Now, let me explain what's going on here. There's a possibility that if we come out, now let me explain auction mechanics to you. This is not a qualified trade. It is an auction trade. Now, what am I talking about? When you see the liquidity, okay, now it's dark at this point. When I come down here, this is a micro trigger. Now, this is not a qualified trade. I need to explain to you what is going on. If the range from this was out here and it fit the risk reward, this is how the market mechanics, this is how the market works. Like here to there, here to there, here to there. That's the auction. Outside in. It's called reversion. The problem with this trade is if you take it, you don't have range, because the way the market tends to work is it's rotational. So these are qualified long, and let me take that back, unqualified longs, because they don't have range. If they had range, they're trades I would take, and I'd be looking for continuations. And you can see that the behavior's there, but not anything else. So they're not qualified, and that's optional if you feel lucky, as Dirty Harry used to say. So now this is too low out here. Liquidity is here. So if I come out here, this is an outside edge, low volume area. It's the same as the long that I took at the low of the day, or near the low of the day. I can't buy the low of anything. Then this is my support. And the possibility is, if I get long out here, to come back here and then to check here. That's what I know. So right here is a possible long, and this is the outside edge, and this is called mean reversion. So right here, I'm looking for a long. I took a long here. Let me look. No, actually, the next trade was something called the IBF. The IBF, sorry about that, it wasn't there. If we remember how this works, if we have sellers here, we have buy stops. If we get buyers here, we have sell stops. So the market's always going to be rotating unless we're on a freight train and it's a trend day. And on a Friday, not so much. Possible, but not likely today, because you need more new buyers. Now, we can still take out yesterday's high. We can still take out the stats for the ETH high because it's open. And we can have what's called the neutral day, which means we take out first hour high and low. An inside day would not be unreasonable today either. So all that's possible. And again, it's not my job, to say it will do anything. So I know my stops are under here. This is the IB low, or the first hour's low. If I come outside, then my next trade is going to be come back inside and come back here. Okay, that's the trade. Let's see, and actually here. So there, and north. So let's see the trade. So if we accept that the context is up, then the possibility exists that once we take out the longs, and if I don't get selling below, and notice what I have here, I have my resting liquidity. If I come back inside, I can then come across. Okay? And then I have mid VWAP in here. So this is mean reversion. Mean, yes. So this is a structured trade. It's called the IBF, and it's a reversion trade. What this might be at the time, we don't know, is to come out, get those longs out that had their stops under the current low of the day, which is called the initial balance low. And we had tested this. Maybe it's too low. If I get below into the stops and I come across, it's called the IBF. Now, here's the way this works. I always think about where I might get the opposing side. I might get sellers at the mid and the VWAP. So if I take this long, my first job is to get risk neutral. So it's to scale ahead of wherever the mid and VWAP is, because I anticipate retail sellers here. Now, they might be right. I don't know. It's not for me to say right, wrong. It's random. So, and I know it's Friday, but this is my trade. So you take your trade and off you go. So this is a long for me. Now I got long out here, but the structured trade is to go long here. So I got long, I got scaled, and my order was sitting here, and then the idea was to come across the range. Pull back here. Another potential long entry, same obstacle. Scale. So you had two shots at this. I got long out on this because I'm trading what I perceive to be an uptrend to there. This was another structured long here to there. You see the trade? So you had two shots, two scales. And then the idea is to cross this because this is the next objective. And that trade, as they say, went to the happy hunting ground. So that trade's over. Now I have nothing to do. I'm sitting here and I'm going, what's going on? Where's my next level? Well, I come back to my higher time frame because I'm sitting here going, right? Well, where's my next location? It's there. Okay. So now I come back and I go, all right, there it is. Okay. Next level to observe. Big buy sweep. What does that suggest? Lower. Sell sweeps. What does this suggest? Higher. Or remember, outside edges. Now this, no clue. I have no idea what this was. I looked at this and I was like, except I was long and I said, I'm glad to see that. But the buy sweep sets up the rotation. The sell sweep, there's one, sets up the rotation. But I don't have location. It sets up rotation, but no location. Location. Sweep. Now I have what? Location, rotation, and microstructure. Let me show you. Now I'm going to show you again how you can box this thing out, and this is what I suggest developing traders do. And where does it change? Let's try to look at this. What is this? Sellers are here, buyers are there. The microstructure. Let me just show you some ideas. I'm just going to throw this in here. This is how I manage trades in some ways. I'm going to say some ways because what I do is not material. I'm in different time frames. But you can kind of start looking at the market in boxes. They're consolidations. So what I know here is I have a sweep. I have my buyers here. That's absorption. You can see the icebergs, okay? What do I got up here? My sellers. Well, I did in this green bubble. What is this? That's buy delta. Who are the buyers? Buy stops. Where are my buyers? It's only them. Who are they? Retail traders who micromanage. Yeah, thank you. And icebergs. So sellers are here. Buyers are there. Chop, chop. High volume. And this is like a micro volume point of control or retail prices right there. Break low. This is resistance. Where were the buyers? Here. What happens? I break. I test. Too high. I move to the next level. Sweep again. Except this time, there. Location, location. Think real estate. Chop, chop. Is it going lower? Maybe. Absorption is happening again here. It's happening all the way down. I'm watching the absorption going, come on. Watch. Where's my high volume? It's here. So if it's too high here and I break away, I'm not paying that, right? Here's the volume. Am I doing this? No. Change. I break high. What is this now? It's support. That's my long. I think I might have mentioned it. I don't call trades, not healthy for you or me. I mean, why take my stop, right? So that's the long. Anyway, still on it. And where are we going? Maybe. What were the stats? ETH high or low. You didn't get the low. So you turn the barge around. Location, location. This. And what are the stats? Let's come back. Taking out the previous high or low. Remember the 70 key thing that happened yesterday. 82%. Do you think we're taking out yesterday's low? Not me. Can I say it won't? Nope. What about taking out the ETH high or low? 97% probability. Do we get the ETH low? No. Why am I getting long? Context. What is the context? North by northwest. Is everybody with me? This is TraderLab. Hope you're getting something out of this. This is trading. I don't know. This is what you can learn in the TraderLab. And it doesn't mean that you can't trade any way or any time frame. What I share in TraderLab is how you can organize information that's market generated. And I don't use indicators. So what I'm using is the levels that the participants create. I don't need a MACD. Does my MACD tell me to get long here? Does it tell me to get long there? Does it tell me to sell this? What does it do? Does it tell me to get short here? What is my indicators telling me? I don't know. So my indicators for me I have no indicators, because our tendency is multiple indicators, multiple time frames, and random inputs all along the line. That gives you winning trades and potentially a failing career in the trading business. So you can have winning trades. Look, when you go to casino, it's entertainment. I know if I go to casino, and I don't do that because, if I'm gonna take risk, I'm only taking risk when I have an edge. If I go to the casino, I might go for a show. But when I see everybody sitting there, I understand their compulsion. I understand what gambling addiction is. We have it here. It's called FOMO. Same thing. And revenge trading or revenge gambling, same thing, right? So we are subject to the same addictive, chemically induced processes. You got to learn that. How do you deal with all this? How about only trading when you have a statistical edge? And what do we remember about this? Let me put it back here. What do we remember about this? Might you take a profit here? And there are stops right over here. And this is a statistical probability. Right here is an important area. Look at the liquidity coming back in here. Why? If you understand order flow. Now, the other part is, where are the stops, right? They're here. So if I'm trading, I'm going here in spite of this. But I know I have to get through this. I could just take my trade off here, even though I have a high probability of going here. Would you be okay with that if you got long from here? This is how I trade. I'm not saying it's a good plan, by the way. This is my trade, there to there. When I take stops, which I do, this pays for my stops. That's a 20-point trade. So I can take a 20-point trade if it happens. And when I take stops, if I probe the market, which I do, it pays me. That's it. This is the TraderLab. You can learn this. And if you're visiting in YouTube, after the fact, don't forget to give a like. This is how you can encourage me to do more content and to continue to do the stream. It's the only, really the only way I know that you're getting benefit from this. You can, if you're in YouTube after the fact, review these streams if you find them useful. There's a lot more to this, of course. I have to tell you, trading is not complicated. Most of us think the secrets are buried in the complexity. There's no secret. This is not a secret, what I'm doing here, and it's not complex. It's actually simple. What is difficult about trading is randomness. That is the part that drives us nutty because we're wired for certainty, not for randomness. How do you make decisions here? Right here, right now. Should you be selling it? Should you be buying it? What should you do right now? Do you know? If you can't answer the question, you need a trade plan because the answers already exist. What you will do. You can't answer what the market will do and where it'll do it. So 10 is a big deal, right? Let's see what happens. What might happen here, and notice this. See how the sellers are back in here? Look at the icebergs. Look at the icebergs selling. Icebergs are down here buying. Icebergs are up here. They were here before. They stopped the market at 10. But let's go to the other way. Why would icebergs sell here? Besides, they like this price. There's fuel stops. If I'm a large, and an iceberg, don't forget, is the tip of the iceberg. Thousands of orders are running through right here. Don't I need buy stops? There's 327 buy stops. There's 200. I need the liquidity so I can sell. These are limit orders. So I need market orders, which are these guys. The stops are market orders. I need the market order for my limits, right? They cross over. That's why I need them. That's why this is important. That's why you could be done with this trade and you don't care about the rest. I hope that makes some sense. This is auction market theory, using a volume profile as a chassis in the intraday developing time frame. And if you guys are in Discord in the TraderLab community, I really appreciate you and your support. Everyone who's listening, if you're watching this in YouTube after the fact, the TraderLab is a community of like-minded traders who've come together to leverage their collective experience. It's too much for me, since I'm a full-time trader, to do all the work. So we leverage our collective experience. We are doing data mining. We are doing structured trades, and I don't call them setups because you'll notice this is based on structure. So they're structured. And the idea of this is data mining, research, mutual support, dealing with the psychological elements. And it doesn't matter what you do. You know, if you're a Fibonacci fanatic, go for it. Most of us, I'm going to say, have all walked in your shoes. We've all done the same stuff. We've all used indicators and more. And all of us are just playing a video game too, at times. Those who play video games and are responding to their chemical stimulants are not going to be in the business. That's unfortunate, but that's why there's over a 90% failure rate for retail traders. If you're doing what they do, it might not be realistic to expect a different outcome. In TraderLab, we are taking what we've learned from our experience and we're reverse engineering retail trader behavior so it becomes an asset versus acting like a retail trader and getting the same outcome. So we know there's stops here. That's retail trader behavior. So if I'm trading and I know there's buy stops in this leg, that's why I can get long. And I'll take a stop with everybody else. What's the big deal? Other than my emotional response. You don't see the dealer in the casino get depressed and go behind the garage and beat himself with a pipe. He just deals the next hand. See the behavior? So what do I have here that tells me this is important? Sweep, liquidity, icebergs, key level from yesterday and still today. And I still think possibly we're going to take this out. And the reason is because there's stops. In the market, what does the market do? The market goes down to go up. It goes up to go down. It goes down to go, sorry, Charlie, down to go up. It goes up to go down. It goes down to come across the range to go up, and then it goes up to go down. How far up? No idea. Not my job. You see? Can I understand and learn this? Yes. Can you? Yes. Did it take me a long time? Yes. Do you have to spend 40 years doing this? No. I've been trading 46 years. I wish I could recapture a lot of those years wandering in the desert, random winners, and not being able to be consistent. Winning weeks, multiple winning trades, winning months, but still always trying to fix it. I never figured out why I had a problem with it. See what this is? So notice the 10. This is what understanding market mechanics is about. Now, the thing I have to always say to you, I can't predict anything at all. All I know is what might happen and where it might happen. That's why we had initially longs, at the beginning, got to the primary target, which was the overnight volume point of control, 82% probability. What did we just do? We just came back to it. Like I said, this, you could be out of the long here, or you're in a higher time frame. Hold on. Okay. Just checking my trade. You guys have questions? And by the way, this is Investor RT. I'm now exporting levels. It's showing me where the high volume is. It just helps me. And in here are low volume nodes. This is an outside edge. In the next higher time frame up, in the developing daily time frame, this is the fair price. And we have another condition that we have now. If we found too low, which is this outside edge in a higher time frame, I know, making you crazy. And this is the next time frame, this whole thing. So the fair price now is there. As I go down in time frame, these are the same thing inside. So think Russian dolls. So this is a shorter time frame, right? So too high, too low, retail, too cheap. Down here, too high, too low, retail. On sale, breakaway, get long, location, see? Then I'm going across the range to this. Then I'm going across the range to this. And it has been a key level. If this is too high, I'm going to rotate off it. Now what? What do I know? I know too low so far, and I still have stops. And I have statistical targets. Do I want to get short? Well, my time frame and trade plan for me says nada. Do I want to be out of my long here? I could. Or do I want to do now something called mean reversion, which is outside low volume node in the high volume. But what was this? Outside in to high volume. It's the same in multiple time frames. Are you confused? It is confusing if you don't understand it. How are we doing? Everybody tracking? Can you see how you can think in multiple time frames? By the way, let's look at language. Now, this is not, notice the liquidity. So what do we have here? Resistance and sweep, retail price. This, no comment on it. A sweep, absorption, and what's happening up here? Pulling. The buyers are here. The sweep is there. Remember, the sweep was here, counter rotation. The sweep is here, counter rotation. Where's my micro high volume? Right there. Where'd it come from? There. That's my resistance. Let's just watch what it does. The resistance is there. The resistance is there. The resistance is there and here. So this is support. This is resistance. We've heard of this somewhere before. If I can clear this, and this is what needs to clear out. Notice what happened here. They pulled. So this is now starting to relieve the pressure as long as this comes up. So now I've got this came in. Why does the liquidity come in? Notice what's here. Liquidity, and I got liquidity. This pulls, it adds up here. This might be the same guy. Cancel, add back in. Pressure creates a counter rotation. What comes in over here? This is like a pitcher and a catcher. This might be catching the movement. There's the sweep. Those are the buyers. Maybe. And again, I don't know. There's my resistance. You see it? Now, this pulls, it opens the hatch. This might only be, here's what we don't know. Why? Are these buyers absorbing? And are the sellers that are up here, are they going to show up again? There's pressure there. So I got pressure here, and now this is pulling. If this disappears and this comes down, it's going to push it. Now, I can't tell you what it's going to do. I also can tell you that I can read this, and I know I got support and I got resistance. That's why these brackets are here. I can see it. Now, but I can't tell you what it'll do because I don't know what these guys are going to do. They can come in, they can pull here. This can be it's algorithmic, you see. See how it, as it ticks, how it changes. So you know you got an algo here. That's not the most important element. We can't do anything with algos. But the differentiator is this. This is not the same. When you see this over here, not the same as that. So we have this on one side, and we got this here. If this disappears, you'll see it potentially move lower. If this thickens up, it'll skew the book higher. Think of them like a hand on each side of the market. Now, what's it going to do? Let me know when you know. But in the meantime, where's my trades? Let's come back. The long, the low of the day. And and listen, I don't want you guys to think that I know anything. I know what might happen. I know where it might happen. And the reason I know it is because the market participants create the levels. These are not lines on a chart the way you draw a line or a trend line. In my world, that has nothing to do with it. It is nothing. Now, you can draw a trend line all you want, and they work sometimes. Everything works. But the thing is, if you can remove the conflict and not go, if it comes here to the trend line, I'm going to buy it, unless it has a proven statistical edge. Because sometimes you will buy it, and it's going to, of course, work. That's why you keep doing it. But suppose if you actually kept track and you figured out you lose overall, would you keep doing it? Now, when you combine trend lines and oscillators and RSI and moving averages and Fibonacci and floor pivots and whatever else, the more you're putting in, the more randomness you're introducing, and you don't really know what makes a trade work or not. If you actually knew the pieces, you would obviously remove the ones that are garbage or noise. How about if your whole plan is just noise? So the random winners are still going to come. Remember, the gamblers win, and they don't have to have any plan. They just, whatever, and some do have a plan, but they don't have an edge. They're still going to lose unless they can create an edge sitting on the opposite side of the table from the house, which absolutely has an edge. Most gamblers, as you know, because they have no edge, even though they have winning hands, they lose. So if you're gambling, don't anticipate a different outcome because you're engaged in a business model that favors the house who does not have random variable input. So that's your choice. TraderLab can help you with that, and so can the Bookmap ecosystem. The Bookmap server has a lot of education in it. TraderLab is a component. This, from my experience and my understanding of 46 years of trading, is the purest form of market. So if we strip all the noise out and all the mechanical indicators, we basically come to a basic process that we can quantify and make consistent. Once it's consistent, we can measure it. And once you learn market mechanics, you can anticipate behavior. We can anticipate this because there's stops here. And what's the probability? ETH higher low, and we didn't get the ETH low, 97%. What's the probability of the previous high? About 82%. I'm working with that. Are you? And it doesn't have to do this. It could just stay in here. Doesn't have to. Because it's Friday. Or, part of the joy, keep going. Why not? If it's random, not my job. My job, statistical probabilities, alignment, wear a helmet, risk management, trade management, manage my emotional state. I get stopped out. It's okay. I accept it. And I have the only thing I do here in real time is take my plan, which tells me already where I will trade, except I don't know what the market's going to do at any time because it's random. And instead of trying to create certainty in a random environment, I create edge in a random environment. They're two different things. I cannot create certainty. I cannot squeeze the risk out. I cannot do any of that. So most of you come to this trying to fulfill your psychological needs of avoiding risk and creating certainty, approval, and all that. Not the business. So now we have to solve for uncertainty. Isn't that a different thing? If it's uncertain, then how do we solve for it? Well, now we have to accept we're in a random, uncertain environment. I'm never going to have certainty. So if I am in an environment of uncertainty, I have to have edge. So the only thing that keeps me going is the edge, not the last trade or the next one. It's the edge. So I take stops because the outcome of any trade in a random environment or any hand in the casino is random. So you see the correlation, guys? Does it make sense? My heat map settings. Well, I'm using the TraderLab Lite, which filters the noise and the bracketing algos. So that's one piece. So when you're asking about the heat map, I think you really want to know about TraderLab Lite. TMap Lite. Okay. TraderLab Lite, in case you guys are visiting in YouTube or even in TraderLab, you're not familiar. There's a lot of stuff that comes with Global Plus. Sweep, stops at icebergs, absorption, correlation. If I want to watch the NQ and the correlation of NQ with ES, I can. A setups checklist. Guys, there's a setups checklist. Do you know that? By the way, you put your quote setups in there and the rules. I don't have any in here, but here. This is an example. Identify trap traders in developing scenarios. Steep and large price moves, and this is just sort of in here. High liquidity absorption. This is like what you look at, and then you weight them. And then how close do you come? You could use this tool. If you're anticipating an IBF, put the rules in. Where is it? Whoa. There's so many tools, guys. Okay, I'm using the low sensitivity filter. That's it. So I want to remove as much debris as possible so I'm not distracted by. And there's some traders who have this thing really bright. I mean, you can have this where you're seeing every little burp in the market. That's noise. So what I want to do, this is what's important to me. This is not a flashing algo. If I do this, See, that doesn't help me. Plus my eyeballs fall out of my head. So this is the limit order book. And, they're always adding and pulling in the limit order book. Those are algos, or HFTs, same difference. So I'm not, so what do you think makes more sense? You see, that is material. This is the liquidity marker. It's showing me the adds and the pulls. So this added, pulled, and you notice 102 pulled. What happened up here? 102. You see, this might be, and what's this? About 100. There's 108. There's 108. There's 100 underneath. What does that do? The invisible hand, except with an order flow tool like Bookmap, it's no longer invisible. What's above me? It's dark. What happened to these guys? Gone. See? Order flow. This is how these tools can be put together. Now, these are separate components. There's our stops, and there's Icebergs taking the other side. They need this liquidity so they can sell into it. Their limits, these are markets. You guys, does this make sense? How we doing? You guys getting something out of this? If you're visiting in YouTube, let me know this is helpful. Encourage me to keep doing this. I'm a full-time trader, and other than trying to sneak the long end down there at the low of the day, and when I say at the low of the day, has nothing to do with the low of the day. It has to do with the level on the chart. That's what it is. It's not about the low of the day. I always say, I have no idea. I don't trade. That's not it. This is the level. I'll tell you where I got long because I can't pick the low of the day. But I will tell you. I got to find it. I didn't get long at the low of the day. I get in at 89, what is it, 89, 90. So, didn't get in down here. I get in over here. And then across the range. That's the trade. And this is mean reversion in a higher time frame. Let's come back. I want you to see Matryoshka dolls. Higher time frame, intermediate time frame. Remember, FOMC, buying tail. This is yesterday. This is where the previous all-time high was. FOMC, out the window, inventory grab. Yesterday's low, this is yesterday, 70. This is called a direct hit. Who knew? Now, now we close above the previous all-time high, RTH. It leaves what? Low volume node. We are now trading something called mean reversion, which is outside in. The in is the 97, and then out the top or wherever. Not complicated, is it? If you're visiting in YouTube, is this logical? Do you think trading can become logical? Do you think you could be done with your trade here because of the probability in the sweep and be back in your Barca lounger? Let's watch the behavior of the liquidity. And it can fill, go through, pull. And if it gets through here, then it's coming here. Mean reversion. Now, I don't take shorts in an uptrend. I just take one side and sit in the Barca lounger. Why? Unless you're a whirling dervish and that's what you want to do. It's up to you. It's not up to me. Your trade is your business, right? My business, take stops, pay the other side. There is always overhead and cost of production. My business, and watch this. Now, I don't have a trade now. I'm just like, okay, I'm done. All right, long to there. Do I need anything else? How many of those do I need? Including stops. I don't need the stops, but I take the stops. The only way I can get the profit is to take the stop. The only way the casinos get paid is they pay to gamblers. I don't know. Logical, isn't it? But emotionally, you want certainty. because we're wired to avoid risk. We're also wired to bring food back to the cave. So is there a saber-toothed tiger behind the rock? So when we're here and we have to make a decision, we're uncertain. There might be a saber-toothed tiger here. I might get stopped out. So we have fear, apprehension, anxiety. Then it's here. I knew it was going to go lower, hindsight. Now it's FOMO. But where's your risk? It's here. Where is the better place to be taking the trade? It's when it's the most uncertain, because your risk is the lowest. Isn't that kind of counterintuitive to you? And I'm using the term intuitive. You see? By the way, what's this? It's not a long. It's behavior. Why might it not be a long? Well, if it's not vetted, then you have no edge. Now, the market could do what? It can come out here and do this and do this. It could come out here and do this. This is the same thing as the low of the day. Outside edge, low volume node. Right there, LVN. It's the low volume. It's right here. Outside to there. It's not a trade I can take. If it came out here and this is in the middle, now in the time frame and range I trade, I could consider, and I don't suspect we're coming back here, but I can't tell you, getting long to go there. And when I came here, I was just getting long from a different location in a higher time frame. Out there, mean reversion. There, back to the current auction. So it was a long from there to there and out the top to there. That was my trade. That was my long. What do I know? It's just trading. But it's something I think you can learn. How we doing? And even the IBFs were okay. And if you understand the structure for an IBF, the thing with, and the IBF was the first, these longs we took before we came back in the first time, which I think were these. Yeah, was this, I think. Yes. So these were longs, okay? Now, I took this, scaled. If your trade plan doesn't understand where you'll get the opposite force come in, you know, like the VWAP and mid guys who are mechanical, and they're correct. They got paid today. Well, yesterday we had the same scenario. We had a mid long and the, was it the mid? Yeah. And I think it was the VWAP and the VPOC were above us. I can't remember, but I think it was the VWAP. What do we anticipate at the VWAP? The sellers. So it's the same. So the long, the sellers. Now the thing becomes, do the sellers get squeezed out, which was, you know, the joy, and the idea was to come here, or do the sellers overwhelm the buyers, which is what happened today, and we go down to the next level. We get to the next level, the buyers show up again, different time frame. What do? Come back here, which is the trade. So all I was trying to do, so you understand, the long here was to get there and there. Then I know I have shorts in here. If I can get outside, and there's my trade, I can now use the shorts in here, their buy stops, my buyers, and new buyers. So I now have new buyers, and I have buy stops. That's my fuel. Now I get to my target. You see how it might work? That's part of the thrill. Then this. And that's that. That's TraderLab. You can learn this. Not saying you'll ever be a profitable trader, because most traders are more interested in the easy, the holy grail, the plug and play. The guru who says all you have to do is the one thing you need. Without being offensive to anybody, because there are good educators, right? Snake oil's been around since snakes. That's all I can tell you. And if you think the business is a plug and play business, no, this is not like software you download and now you push a button and you have an ATM in the basement. Unfortunately. But fortunately, you can learn how to trade. But you're going to have to change what you believe trading is. I had to. I thought it was measured moves, things of this nature. When I first started trading in 1980, I went to CME, and they actually taught me classical bar charting, and we didn't have candles back then. So it was an open, high, low close. And so it was, head and shoulders, pennants, triangles, rectangles, all kinds of that kind of stuff. But you always had a target. So I came into the business and I figured, hey, CME, and I got all the books and the stuff that was available at the time, and started working on measured moves and then predicting, drawing my trend lines and all that jazz. So I, did that for a while. And then technical indicators were coming into the business. So when Wells Wilder and that stuff became available, don't forget, we didn't have an internet, we didn't have PCs. So it was very much an analog environment. It was all floor traders. There were no off-floor traders, or very few. I didn't know any. Never met one early on. And all my friends were floor traders. They thought I was out of my mind. And now looking back, they were right. I just didn't know it. So different business, right? So over the years, I kept trying to use indicators as I became more familiar with them. I even shared an office with George Lane. He created stochastics. So I saw oscillators and I deconstructed this stuff. I applied them to everything, up volume, down volume in the stock market, up shares, down shares, issues, up, down, up, all this stuff. So I was looking for all these ratios and behaviors. I spent years. Then I was doing oscillators between bonds and stock. I don't want to waste your time. I'm just going to say I dug so deep into it, but I kept, in spite of all the random winners and all the inputs that would create these winners, it still didn't have an edge. So then I built trading systems to optimize the random inputs. It still didn't solve it. All I can say is tuning, tweaking, getting the screwdriver out is not the solution. It might be the problem. If you want to learn more about this, there's a link in the bottom of YouTube. You can use the link. There's no cost to come to TraderLab community. It might change your outcome. Assuming you do the work, you vet an edge, and then you develop the discipline to only interact with the other participants when you have a statistical probability that favors you. And yes, you're still going to pay the other side, same as the casinos. Hope you got something from this. Don't forget to leave a like on the way out. And remember, there's a special series going to happen next week. The Bookmap coaching staff is going to be doing a special presentation. It is available only in the Bookmap server. So use the link in the bottom of YouTube. You can see what the Academy coaches are all about. And you have to check the event schedule so you can see when they are. And you do need to register for it. And by that, it means if you're in YouTube and you want to participate in this and the TraderLab and a lot of other education, you just have to confirm your Discord username. So we know you're not a spamulator. And you know all about that. So you'll get a code and you'll confirm. You'll never be solicited or abused, but you have the opportunity to join a terrific community of serious traders looking to build out the business of traders. So I hope to meet you there and hope to meet you in the TraderLab. Thanks so much, everybody. Have a great weekend, and thanks for visiting the TraderLab.